SpaceX goes public on June 12, $135 a share. $1.77 trillion valuation, $75 billion raise in a single day. For context, that's bigger than Saudi Aramco's IPO in 2019. That's bigger than anything that's ever happened in the stock market ever. And right now, everyone you follow online is losing their mind about it. Buy SpaceX. This is a once-in-a-generation opportunity. Don't miss out. And look, I get it. It's SpaceX, rockets, Starlink. Elon Musk potentially becoming the world's first trillionaire off this thing. The hype is real. But I want to show you something that most of those people aren't telling you. Because the way most people are planning to invest in this, it's going to cost them money, possibly a lot of it. Stay with me for just a few minutes because this one actually matters. Okay, so let's just get the facts straight. First, SpaceX filed with the SEC back in April. The S1 went public May 20th. Roadshow started June 4th. Trading starts June 12th on NASDAQ under the ticker SPCX. The company is selling 555.6 million Class A shares at $135 billion each. Total raise to $75 billion at that price. SpaceX becomes the seventh largest company in the United States, ahead of Tesla, ahead of Meta. Now here's a detail that most people gloss over. In February, SpaceX absorbed xAI, Musk's AI company, in an all-stock deal. So what you're actually buying when you buy SpaceX isn't just rockets and satellites anymore. It's rockets, Starlink internet, and a money-losing AI operation all bundled together. SpaceX lost $4.28 billion in the most recent quarter. It lost $4.94 billion in all of 2025. That doesn't mean it's a bad company. It's investing heavily in infrastructure. That's normal for this stage. But I want you to have that number in your head when we talk about the valuation. $1.77 trillion. Valued at 67 times its annual sales. For comparison, Nvidia, one of the most hyped companies on the planet right now, trades at about 22 times sales. SpaceX is asking you to pay 3 times the premium you'd pay for Nvidia. Again, not saying it's wrong, just saying you should know what you're actually buying. So here's where people go wrong. And I see this every single time a big IPO drops. Mistake number 1, buying on day 1 IPO day is not investor day. IPO day is exit day for the people who got in years ago. The venture capitalists, the early employees, the private equity funds. They've been waiting for this moment. And the minute that stock opens for trading, they start selling. You know what happened with Airbnb's IPO in 2020? Stock opened at $146. By the end of 2022, it had dropped to $85. People who bought on day 1 waited 2 years just to get back to even. Uber's IPO in 2019 opened around $42, dropped to $26 within a few months. Now both companies eventually recovered. But the point is, the best price for a new public stock is almost never on the first day. The hype drives the price up, early investors take profits, and patient people who wait usually get a better entry. And here's the thing, Morningstar, one of the most respected research firms out there, published an analysis this week saying SpaceX is worth around $780 billion, not $177 trillion. Their number is roughly half the IPO price. I don't know if Morningstar is right. Nobody does. But when a serious analyst says a stock might be 50% overvalued at IPO price, that's worth paying attention to. Mistake number 2, treating Musk's involvement as a reason to buy. I like Elon Musk's ambitions. Rockets are cool. Starlink is genuinely useful technology, but Musk holding 42% of this company means he controls the deal terms, the direction, and the narrative. He fixed a price before the investor roadshow even started, which almost never happens. That's confidence, yes. Plenty, but it's also a signal of who has the leverage here. When one person controls a story that completely retail investors, people like you and me, are usually the last to know when the story changes. Mistake number 3, thinking you're missing something if you wait. You're not. SpaceX is going public. It's going to trade every single day after June 12th. There's no deadline, the idea that you have to buy on day 1 or you've missed the boat. That's just the hype machine talking. Okay, so what does the lazy investor actually do here? Option 1. And honestly, the option I think makes the most sense for most people watching this is watch the stock for the first 30 to 90 days. See what happens when the lockup period ends and early employees can start selling their shares. That's when you usually see the real price discovery. That's when the hype fades and the fundamentals start to take over. If SpaceX is as good as people say, the stock will still be there at a reasonable price in September, and you'll be buying with a lot more information than you have right now. Option 2. You want exposure now, but you don't want to overpay. Look at index funds that will eventually hold SpaceX. Here's something interesting. SpaceX is on a fast track to join the NASDAQ 100, possibly as soon as 15 trading days after the IPO. That means if you already hold a QQQ or any fund that tracks the NASDAQ 100, you're going to get SpaceX exposure automatically. No decision required. That's kind of a beautiful thing about index investing. The lazy approach just works. You don't have to chase the hype. The hype comes to you. Option 3. You genuinely believe in the long-term vision. You understand the risks, and you want to buy at IPO price anyway. Fine. But size the position like a bet, not a conviction. Keep it under 2 or 3% of your portfolio, because at a $1.77 trillion valuation with $4 billion in quarterly losses and a half-finished AI integration, this thing has real downside risk in the short term, even if it's a winner long term. Here's the question I keep coming back to, though. Why is SpaceX going public now? Think about it. This company has been private for 24 years. It didn't need to go public to raise money. It's been cash flow positive and doing private fundraising rounds just fine. So why now? A few theories. Musk wants liquidity for XAI. The AI build-out is expensive, and absorbing XAI into SpaceX essentially lets him raise $75 billion to fund it through the SpaceX brand, which has way more credibility than XAI alone. 2. The political environment is favorable right now. Musk has close ties to the current administration. That's not nothing when you're a defense contractor launching rockets for NASA and the government. 3. And this is the one I think about most. When insiders are this eager to go public after 24 years of staying private, it sometimes means they think the window of maximum valuation is open right now, and they want to walk through it before it closes. That doesn't mean the company is bad. It just means the people who know it best think the current moment is the best they're going to get, and that's useful information for you as an outside investor. So here's where I land on SpaceX. It's probably a great company. Starlink is real, the rocket business is real, and the long-term case for space infrastructure is genuinely interesting. If SpaceX executes over the next 5 to 10 years, people who buy at almost any price and hold will probably do okay. But the IPO price has the maximum amount of hype and the minimum amount of information baked into it. And that's exactly the kind of moment where lazy investors hang back. Let the excitement settle, and move when the situation is clearer. You don't have to be fast. You just have to not be wrong at the worst possible time. That's the whole game. If this video was useful, hit subscribe. I do these breakdowns on exactly this kind of thing. No screaming, no fake urgency, just the stuff that actually matters. Drop a comment below and tell me, are you buying SpaceX on day one or are you waiting? I'm genuinely curious. I read every single one.